Hi, I'm Bill Baruch with iiTrader, Chief Market Strategist, coming to you from the CME Group. What we're going to talk about today is the big week ahead in crude oil. We have the options expiring for the September contract on Wednesday, and the futures expiring for the September contract on Monday. However, the last trade day is Friday. Now, to understand the impact of this week, we must look back to what happened over the past 2 weeks. Crude oil, since the expiration of the August contract, sold off 15% since the end of July to reach below $40. Record short bets were netted at that time by managed money. On top of that, the crude oil also achieved a RSI, the lowest level since January. We saw a perfect storm of news as the market was relieving itself from below $40. OPEC freeze talk, as well as Ukraine-Russia tension, explosion on pipeline Nigeria, a outage of a U.S. refinery, and a weaker dollar. All of this combined to help relieve the oversold pressure on crude oil. If everybody's so bearish, who is left to sell? This morning, we find the market back testing the $45 level. 100-day moving average on the continuous basis comes in at 44.79. We're looking at the next couple of days as a consolidation period where the market will be able to rebalance as these options expire. Listen, there's 36,000 open interest coming into Monday on the $40 puts. No wonder that the market couldn't follow through the downside. There's a lot of open interest around the $40 strike. On top of that, there's a lot of open interest in the 45 strike, which is 20,000, and a lot of open interest around that. So what this is going to work to do is keep the market capped. Now, we could see price action rise as high as 46 this week, but we're eyeing this expiration options as well as the futures expiration as a rebalancing act. The commitment of traders from being so netted short over the past 2 weeks, actually upon this reversal had not really been, we did not really see a relief on the short side. Short side stayed steady. However, we saw a big addition on net longs. What this says is that there's new net long positions, new net long bets are being taken. However, the short bets are not being reduced. On top of that, even though the market is higher, we've seen more selling come from producers. Actually, the fastest pace in months producers are selling over the week ending last Tuesday. This also signals that they have crude oil that they're looking to hit the market with. We've seen rigs rise for the 7th consecutive week, which is the longest streak since 2014. Ultimately, what we're getting to is this week is going to be a rebalancing where the market is going to be able to reprofile and be able to, and if you're going to look to find resistance at $45 to $46, we think this market is going to round out and be able to, after this expiration, to fall similar to it did in August and go back on after the expiration of that August contract in the early part of August, and then be able to go back below $40. So it's going to take patience this week to get through this expiration, but at the same time, we think it will pay off in the end. As always, futures trading involves substantial risk and is not suitable for all investors. So you must manage risk properly. Thanks a lot. Have a great day.